Hi and welcome to Matrix Moments. It gives me great pleasure to welcome Rajiv Ahuja to this episode. Rajiv is Executive Director at RBL Bank. He has a career spanning 30 years across banking, financial services, including Citi and Deutsche. And I think the 30 years gives away his experience and age. He was instrumental in building Ratnakar Bank into RBL Bank. A fascinating story over the last 7 to 10 years. He spearheaded the fintech initiative at RBL and really made RBL one of the best partners for most fintechs. For me, he's a friend who I can debate fintech and fintech future with, and I thought it would be great to get him in for an episode and have one of our debates. And hopefully, it's great learning for all of you who are listening to this. I've always found Rajiv to be the most thoughtful or having the most thoughtful point of view. Rajiv, thanks for coming. Maybe start a little bit with this journey of you and RBL and discovering fintech religion, as you put it.
Thanks, Vikram, and always a pleasure to talk to you. And we do admire Matrix for some of the incredible businesses you've invested in. And we have the good fortune of, I think, working with most of your fintech companies, well before you sometimes invested. So we can take some credit for that. But thanks a lot for having me and the bank here. I think, look, I mean, I'll be upfront that, 2010, when we moved into Ratnakar, we had so many priorities which were just to modernize the bank ground up in many areas where, things were not even there. So our emphasis on technology as a big anchor and driver of new businesses was just not even in our realm. We always have viewed technology as a core support function. I don't think we had this epiphany that technology could be the way to drive things. And that came about in 2013-14, partly of our own situation where we had started building our branch network, retail, and just found that actually just following the playbook of the more successful institutions, of private sector space, we will never be able to make a dent. Something had fundamentally changed, and partly our own brand and consistency of product services was yet to be established. So this was like an internal challenge and drive that, what is really happening? And then you see announcements of significant investments by people like yourselves or global companies in payment products and services and e-commerce, and you just wonder, what's really happening. And my own experience of I used to be a tech banker in Alex Brown in Asia, and this was the first .com era. And sometimes when you've been through that painful process, the aftermath of the .com, you tend to disbelieve anything happening around.
You took a bunch of companies public then?
1998 to 2000, early 2001, and then it kind of, the music stopped.
So what's similar and what's different?
So I think many elements are similar. And while I think I'm a very chastened person today, having learned a lot, but I do think that some of the dimensions of, if you build it, they will come, curse of capital, which is a phrase I've picked up a couple of years ago, are pretty much what you've seen in different parts of the new economy landscape. And I'm not saying those are not necessary, because I do believe that some of that is necessary to create markets. But I think you need to just be careful that using business models and journeys of countries like US and China, very different starting points, very different legacy developments which have helped these economies reach scale and valuation, is very tough to replicate. I think India, we've tried to crash almost like 15, 20 years of history in 3 years. It happened in 99 to 2001 in India. But the interesting thing is online consumption and consumption of modern services has kept growing. I think it's just the business model to what do you build and what you avoid, and how do you make money eventually. And that's the other thing I can tell you hasn't changed. If you asked me in 98, 2001, how will you make money? Ho jayega. And between 2014 and at least till 2-3 years ago, first let's build it, and therefore you just go and spend money. And sometimes the spending is necessary because you don't know what's going to come about. And if I extrapolate the next 10 years, the space for younger businesses. Now, I get a little bit, and you have to pardon because of my age, I get a little bit challenged when people just talk fintech. I don't like the word fintech. I like the philosophy of fintech, but let's build financial services companies. I mean, but the space for financial services companies is enormous. I mean, you think about the entire small, medium enterprises. I think you guys have some very exciting businesses. Again, we're lucky to be bankers to them. You think about merchants where you have M-Swipe and, we bank them. And those markets are so underserved by the large institutions. And how many large institutions do you have in the country, in the banking space? On one hand. And we are probably on the third hand by size. NBFCs, every 2-3 years it becomes a 4-letter word. I think NBFCs are marvelous companies because they bring focus. They bring, access to capital and services for customers who are not yet in the scale zone of large banks. And we started this journey, and I'm trying to mix a few things up so your viewers know.
So I'm going to put a pin in the discussion on fintech, on fin versus tech and financial services, and we'll come back to that thread. But I want to go back to your original thread on how you discovered fintech religion. And I know that you spent a lot of time thinking through your strategy, learning from everyone else.
So thanks for bringing me back to that, Vikram. But 2013-14, we had this challenge internally, and there was something happening outside. And we had a couple of members on our board who are very, very deeply engaged in the tech space. And I have a lot of friends from my earlier journey of actually being a tech banker and running a small tech VC fund. I mean, tech is a little overdone word there. And I reached out to them, and we were prodded along the way saying, guys, just see what's happening around you. Don't do anything heroic, but just go and learn. And it took us about 6 to 12 months of almost 2 days every day in Bangalore, just meeting VCs and meeting startups and just hearing things out as to what were these guys trying to do and what was the big agenda they had and what were the challenges they were seeing. And I think that started giving us some pieces of a picture which was forming. And I will probably bring the kind of epiphany we had then to entirely being open to influences, serendipity, and a lot of miles. And I think that gave us some insights that, forget the business model. There is a real change in the way customers will approach financial services. Businesses will approach financial services. Some of that will be slow, some of that will be quick, and some of that will need a huge amount of momentum of money, large companies, and some of that will be slow and steady. I don't think we got it right the first time. But this ability to actually listen to people, absorb, mull it over, and it was damn confusing to me actually. And then we were lucky because we as a bank built out our technology in 2012-13. So we had no, what you guys call the legacy technology debt. And we bought in a very, very interesting middleware platform, which, if you ask me, I figured out what an API was finally in the tech world. I knew what an API was in the chemical and pharmaceutical world. And our tech team said, look, this is the way the world is going to do business. And then, what does an API mean on your mobile app? And that was the easiest thing to understand. And we figured out that actually what's happening in the consumer world will ultimately happen in the small business and the large business world. It's a matter of time. So we started peddling our API, very simple API, engines, and put it on the developer platform. And that brought us a lot of insights. So this was, to me, evangelizing internally as well as learning externally. And then when we caught on to it, and obviously, you read a lot, you talk a lot, A lot of consultants come and share with you, and then you assimilate, some make it out of your own, and then you start implementing, testing. So we learned also at the same time the learn, test, experiment, go back, and then scale.
People often ask me, is fintech making a dent? And the biggest thing is that bankers are now talking APIs. Yeah. So fintech has definitely made a dent. When
This is very humorous because in 2014, and I had taken I had taken a script with me from my tech guy, and I've taken a diagram of what APIs really are, and I'd taken, because when you sit with some of these VCs and young companies, and you're like a fuddy-duddy banker in a suit, if you drop some of these things, then suddenly eyes light up, So I actually started learning this, and the good news is I never went too techie because I would have lost the conceptual plot. But it took us a while to convince our own people. So one of the things we started doing in 2014, whatever we are assimilating, we were getting people in to talk to our teams, our senior management, our business teams, our product teams, risk teams. And we said, look, we'll struggle to understand this, but let's start grappling with it because this is going to be a big driver of our future. I think we were a little bit perturbed because of the enormous money the larger players were pumping into the market, and there was this neighbor's envy. Why is this guy able to do and you're a young bank? And we were being cajoled and coaxed to set up, a digital-first institution, and we didn't have the money to spend. Our cap structures were not conducive to lose money to create a market. But we said, let's keep learning because, one of the things you do recognize, having spent 30 odd years in conventional organizations, that business models and strategy and what you intend doing is really a very long-term game. And India is not going to be, make it big and quick and keep it sustained kind of market. So we said, even if we are number 10, number 12, let's assimilate and learn because we don't have that money to spend. And there was this gut level conviction that some of this will go horribly wrong, and we don't want to be there, picking up the change which is left from our massive investment. We were investing a lot in conventional things, and I think we started reordering our entire business around tech being a core anchor. So one of the great learnings to me is not about whether we built a fancy new app or wallet. We couldn't afford it. But we started looking at tech as reordering our factors of production. So if you look at the factors of production, capital, labor, management, etc., we said tech has to be a larger factor of production. And in some senses, when you talk fin and tech, I think in financial services of last 2-3 years and the next 15-20 years, tech is going to play a major role in how you optimize your consumer or business connect, your cost of delivery, your risk management. And sometimes, because this is now a very connected world, you can build financial services business in deep partnerships, which, by the way, is a learning and a philosophy we kept from day one, that we're a young bank aspiring to be in the same bracket as the top 7-10 banks. We're never going to get there on our own. Let's partner with people who are equally hungry. And this partnership mindset has carried us, to me, more than technology to this day. And I do believe that consumers and businesses are getting more empowered, which will help us connect. So our credit card franchise, our merchant franchise, which you are very well aware of, is totally anchored around partners. We are so comfortable working with them. And more importantly, we respect these partners.
So I want to double click on that, because how do you balance this partnership and almost experimentation mindset of spawning some of these new business models, new go-to-market strategies, with running a bank which is essentially managing risk?
Yeah. So somewhere I think let me be honest. We have had a great management team and second line, third line from day one. That's been our aspiration. Governance, management, capital are three things which, frankly, whether you're a fintech or a 20-year-old bank, will count. So we built enough management so I could spend my own time thinking about these things, and then rapidly we wanted our entire team to get evangelized. So today, I'd say if you work in RBL and you don't have a concept of technology, customer centricity, design in some element, I'm not saying we're there. You perhaps don't have a future to work in RBL. I think at the Mancom, at our extended leadership, technology is in the same sentence as risk management. And it's not about technology being, having an altar where you keep worshipping it every day, but it's a big part of how you will build your business. As I mentioned, build scale economies not in a conventional manner, straight through processing. Risk management, actually we use more technology in risk management than we do in the consumer experience side. So it took us time, and then suddenly what happens is when it's almost like, you build a little snowball and then keeps accumulating, and then there are external influences, and I have to credit Nandan Nilekani for his WhatsApp moment in banking video, which frankly, and we had been, seeing the Aadhaar journey. In fact, a big part of our business, financial inclusion, was anchored around Aadhaar, even though Aadhaar had just started. That set the ball rolling, and then one after the other, then you almost now are a part of the religion. But I do believe that what we've tried to be is being a questioner, a kind of not a disbeliever, but always questioning, why will this work? Why won't this work? And ensuring that it doesn't, become debilitating for us from a risk management and capital structure perspective.
So, part of our business model as venture capitalists to go very early and work with founders, but some of these things might not work. But that's built into our business model. But some of these things might not work, is not built into your business model. Yeah. So how do you...
So sometimes, it's fortunate that your construct of being a bank and showing positive ROA leads you to be very frugal in some of these things. I mean, we've made some big time errors on credit and, which is, they're big time for us. They may not be big time relative to the market. But, so let me share with you a business we started in early 11. And it's a business which no private bank took up, was microfinance. And there were many microfinance entities there. And we felt, and pretty much that if you take a 10-year view, what are the trends? Increasing mobility at all levels. Increasing infrastructure, power, roads, transportation, aspiration, knowledge. What happened in the housing market starting the mid-90s, because you had, and I love this phrase of the late Dhirubhai Ambani, in India, supply creates demand. So we said, look, all these things, and then Aadhaar was announced in 2009. We said, like, in a 10-year journey, all of these will converge. And, what you guys call I love this phrase, combinatorial, exponential, etc., etc. Everything is converging. Okay, so we said, yeah, in 10 years, everything is converging, and we don't know what we will play, but let's start small. So we started very tiny, and we used our existing branch network in Kolhapur to test financial inclusion out. So we went, now I know what the word to say is pivot. So we pivoted our model twice. No. So really sometimes it's easy to explain these things, because you guys have some interesting phraseology, which helps us, digest our experiences too.
This is a large bank pivoting, yeah.
Yeah, no, we pivoted in that business, Alan. I can tell you that we've pivoted again post demonetization. And there I want to suggest a word of caution for some of the fintechs who actually have played to a playbook of, unfettered rights to do business in India and financial services. I think the cost of regulation and the increasing compliance requirements have not been factored into the speed, scale, and the quality of teams. And I think that will slow down many people, as you've seen in the payment space and the merchant space through the debit card. I think a lot of that will come in the NBFC space down the road. But back to where we were. So we said we'll only spend this much because we can't afford it. And the learnings of those 2.5 years, by the way, today we talk about 200, 300 crores a month. It took us 2.5 years to reach 100 crores of portfolio. Okay, other banks, other MFIs were at 1,000, 1,500. And you know what we did? We lent money to MFIs, and they were hungry for capital. They were happy to explain to us how this worked, and it was great for both of us. And then when it started showing promise, then we scaled it up. And Demon was a big dent, and a business model change was warranted because your customers were more aware. So interestingly, in a 7-year journey, I'd say we built a successful, profitable, still growing at 45-50% with a potential market leading position, which you'd love to invest at 8 times price to book, Vikram.
You keep advising me not to do these high prices.
But I'm sitting here, I might as well tell you that if you had a chance to invest.
Thanks so much for taking us through that journey of the internal workings of RBL, and through pivots and through discovering tech as core and becoming really a fintech partner. I want to go to this debate that we've had. Is fintech more fin than tech? You mentioned it's just financial services. Everybody's going to be doing about the same things. And I want to put some biases on the table. For me, so far, I've preferred working with people who are more fin, at least in terms of a mindset. They might be coming from the tech world, but understand risk, understand collections, understand balance sheets, are thinking about building both businesses as well as teams, incorporating the financial services ethos into their company. Yeah. When you guys evaluate partners, how do you think about it? What is advice for fintech founders now?
Yeah, so I 100% agree with you that, and I think as I mentioned earlier that, India is a very interesting market, that the revenue width of most businesses is very narrow. You need to add many more services to make that relevant. And sometimes the steroid of excess capital can lead you astray. Okay, what you need to do is think of in my view, very simplistic. I mean, we had a 10-15 year vision when we started with Ratnakar, because we said in 10-15 years we can build a bank, but we can't build a bank in 3-5 years. So if you give yourselves enough time, okay, and that's where people like you as early stage investors also have to reconcile your investing cycles with business building cycles. And I'm not saying, you guys are not doing a great job, and many people like yourselves are doing a very good job. But I do think that especially when you're focused on financial services, which in my view in a country like India will always have this umbrella or the rigor requirements or the compliance requirements, and they will keep becoming tougher. Because we're not a country with for 50 years of a fantastic financial services system or a quasi-oligopoly like China, which was mandated. Okay, you have smart private sector banks and you have a very, very, very watchful regulator. So I think if you incorporate that in your DNA on day one, and you see that this is a 10-year business, and I'm actually of a very, very firm opinion that you will see some fabulous businesses being built, hopefully in some of the companies you've invested in financial services, because at a deep down, our structure of suppliers is very challenged. I mean, the reason we are successful, even partially as RBL, is because you don't have 20 banks like HDFC or Kotak's around. If you had them, we may not have been as successful. And if you go back 25 years, the start of HDFC, Axis, ICICI, the reason they are successful with such a short lineage versus many old private sector banks, which have had 80, 90, 100 years, is because the system had many, many gaps. And they were smart about it. Where would you be 10 years from now? What is the business construct you have? How many people you need to be? And one of the things I do believe which has changed between, let's say, before the time we came into Ratnakar and now, is that obviously consumption through mobile phones, data, analytics are playing a larger role than they did ever in a financial services world. It has two implications, actually three. One is your ability to acquire customers, sustain them, see their behavior, much like what you do in consumer tech, consumer services, it becomes interesting and relevant. Second, your cost of processing, because if the customer self-selects and self-services, your cost of operations drop dramatically. And we were using Aadhaar to build out a savings account base. Our costs dropped by 70-80%, which means I can afford a lot more average savings accounts than I can afford on a branch. And there's a bigger story behind it. We'll talk some other day. But the third element is risk management. So today when I see fintech lenders, okay, just relying on data, nothing wrong in that. And you should have that as a centerpiece of your thinking. because data availability in 5 years' time will be a lot more. GST is coming along. There'll be more coverage under GST. But is GST the only way, or is it necessary and sufficient? No. You'll still need people. If you're lending large sums of money, if you're lending small sums of money, even then, because I think consumer behavior, business behavior changes with the availability of capital. At least that's the first round of reflexivity. So consumer small value payments for taxis and Swiggy and all, you do a transaction, you forget about it. Okay, you don't really bother about it. And those have been induced through, So
firmly on risk collections.
And compliance. You wanted to talk about what
So,
advice
no,
would you have.
Yeah.
So good, I hear you. You'll need to build
Got it.
collection, compliance, risk.
Thanks, Rajiv, for the time and the candid conversation. Lots to learn from and some views that we subscribe to as well. I'm recapping some of these here. First, banks are fintech, probably more fintech than we give them credit for. Great to see the introspection and the learning mindset, and frankly, the openness to contra views. Second, high tech, high touch, or phygital, which is physical and digital, is the way to scale, especially given the Indian context. Thanks again for joining us, Rajiv, and good luck to all of us in the fintech ecosystem.
Thank you for listening, and you can find the transcribed version of this podcast on matrixpartners.in. You can also follow us on Twitter and LinkedIn for more updates.